Well, here we are. The last section of this class. I know it's been long, but I wanted to include everything possible that my knowledge base has and what my team has been able to do to give you every detail I think that's very, very important. Now, I'm going to talk about Oklahoma City, and it's not because after all this time I want you to buy with me. I want you to have a dialogue. I want you to understand what you need to know. And Oklahoma City is my market. It's where I grew up. And so it's something where I can relate to. And this is, again, so that you understand the questions to ask, what a real estate professional needs to be able to give you if you're going to buy in that market. So let's talk about it. So what I normally tell an investor is the metro area, all right, which is the immediate suburbs, feeder cities, and the main city. And, what we're looking for in this case is population growth and affordability. The reason why population growth is important is there's more people that can rent properties for you, more people that can buy properties that are going to help you appreciate. And I don't want to invest in any market where people are leaving. And there are some cities that are like that. So Oklahoma City is about 1.4 million at this point in its population in the metro area. It's been in the top 14 in the nation in population growth. That's about double the national average. So again, when you're looking at a city, look at the growth. Then the other thing about it is we talked about this before, what's called the affordability index. Some cities are very poor. If you're in San Jose, California, or Miami, Florida, for instance, you're going to have a very poor affordability index. We're in the top 4 in the United States for affordability. So a market, again, I mentioned Omaha, Nebraska before, some other cities that are like that, Kansas City, Little Rock, Arkansas, just areas that I know from being there quite a bit and seeing what the values are. So you're looking for something that's affordable. The reason why is what you're trying to do is build up your inventory. And so, buying two $250,000 houses instead of one $500,000 house is kind of what I normally recommend to people as their starter point. It's more affordable, doesn't require as much money, and 2 properties. Again, remember, if one's vacant, the other one is still earning some money for you. So it's one thing that you've got to look at in any city. Now, the second thing is you're going to look for the unemployment rate. So the typical unemployment rate is about 2.2% right now in Oklahoma City. I believe when we're doing this class, it's 3.6% nationwide. So obviously we have jobs. That's the other part of this. If the population is growing, then there must be a reason that people are coming. It's got to be basically jobs. Now, in the last couple of years, we've seen unemployment as low as 1.9%. Now, during the pandemic, like every place else, it was higher than this. But once the pandemic was over, we saw a dramatic reduction in the unemployment rate, and it's something to look at. And then a company called PayScale that basically looks at the cost of living and tells workers, you may want to go here or not want to go here. They actually said that we were about 16% below the national average. Now, part of that is housing costs. Part of it is transportation. It's, you look at cities, how easy it is to get to work. Is it 20 miles, no big deal, or is 1 mile a big deal? And you're also looking for other kinds of things, the overall tax, state, federal, local, and you're looking for other things, that are going to affect you. Groceries, gas. You just look for all those things in terms of the affordability index. And so what that allows us to do is have people that can go ahead and pay the better rents. But this isn't the only thing, that's just the starting point. So that's the overview, the max view, all right? But then we have to drill down a little bit further, and what you need to know from your specialist is, what kind of jobs are being created, what kind of population is growing, what's coming into your city. So I've shown this before, but the blue line, as you see there, is Oklahoma City. The red line is the United States. So you can automatically see on the one axis the affordability. Because we're lower than the red line, it means that we're more affordable on the average. And as the United States gets more expensive in housing, that becomes critical in terms of looking for those types of market if you're a beginning investor. You can also see that, other than that dip that you see, which had a lot to do with oil and gas at that time, you can see it's been very, very steady. Even at that time of the mortgage meltdown, which is that big shading area that you see right there, then we did extremely well. And so, again, you need to look at these things and remember, Fred, this is from the St. Louis Federal Reserve. You can verify any city, any area. You can create different combinations of graphs and things if you're trying to contrast it with maybe another city or whatever you're doing. So this is something that allows you to see what kind of a market performance can I expect. Doesn't mean that a linear market like this is the only place you want to invest, but understand that some markets, you've got to have maybe a little bit more reserves if it works in a jagged type situation of ups and downs. Right now, everything seems great in the United States overall, but it's not always that way. Okay, that's a little bit about what I wanted to talk about. When I do talk to investors, I do talk specifics. We talk about the particular neighborhoods, what's around it. We talk about the types of jobs that are being created. We talk about new updates in terms of what Boeing is doing or what an oil and gas company is doing or whatever company is doing here. And so we try to just constantly have economics and demographics because data is king. The more that you know, the better decision you're going to make. And that's why this class took as long to create as it is, because knowledge is power at this point. So in summary, let me just say thank you. I appreciate you being here. I appreciate you giving this a try. There's going to be more coming from this. There's going to be some areas of expansion, some new classes. I'm going to update this thing periodically as things change. I want you to know that. I'd love to hear from you about what you think. If there's things that you don't think were included that should be included, I'm willing to do that. I'll be happy to add and send it to you. If you feel like that something was a little confusing, well, let's unconfuse it. Let's just make it a whole lot better. But most importantly, let's go out there. Let's be responsible with our money, with our expenses personally. Let's start putting money into things that make us money. Real estate is one of those things. And I welcome you, any kind of feedback that you have. I wish you the best. I hope that this has been helpful. I want you to go out there, and I want that financial peace of mind to be there for you and your family. Thank you again. I enjoyed being here.